Hello and welcome to Pro Trader Strategies Market Commentary for Friday, May the 6th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Had the big non-farm payrolls number today, and our average hourly earnings actually came in line with expectations, but the non-farm payroll number, which is the number of people that got hired, was 160,000 and was expected to over 200,000. The unemployment rate remained the same, but one of the big things about that average hourly earnings that I talked about, we saw a lot of that in the ADP number, where that number looked like it started going up, where the compensation workers get was increasing a lot. And I talked about that. That would be good for the economy, and that would be giving people a little bit of extra spending money to put into the overall economy. Well, in the non-farm payroll number, which is more widely watched and more accurate, if you will, didn't show that increase that the ADP number showed. One thing we got going on here, everybody knows about the fires up in Canada and really affecting the overall oil market. It's only about 600,000 barrels a day that's being affected there, you guys. So the overall crude oil market's pushing higher because of that pullback, and it really isn't but a drop in the bucket, if you will, of the overall supply that's being put out there throughout the world. So just keep that in mind. Be a little leery of that. It's not huge, and those guys have been ramping down their production in the oil sands and here in the States with the shale oil. So they just, with the prices being this low, are not able to produce a whole lot. So just keep that in mind. The overall market is reacting to crude oil. I've talked about this several times. Crude oil goes up, the equities find a little bit of buoyancy, and it must be the algos or something that look at if oil goes up, we should go up, because that's a sign of a better economy. Right now it is a little bit bizarre to me. We shouldn't see oil going up because it's really not due to demand, which then if oil going up was due to demand, then that would be good for equities, but that's not necessarily the case right now. On to the equities. As you can see here, /NQ, down about 10 points on the day, right around the mid-range. They did go into positive territory a little bit after the open, but have since come back down and even tested the low seen overnight, and right, like I said, or mid-market, if you will, with the NASDAQ being down 11 now. /ES, as you can see, right about in the middle of the overall range. They did go into positive territory also, but this bad economic data from the non-farm payrolls really weighing on the E-mini S&Ps /ES, as you can see, down almost 4 points right now. This is the daily chart breakdown on a 15-minute segment of the E-mini S&Ps /ES, and as you can see, heading into that number, we really got a rally coming up, and this was at the highs, right at the number, but as soon as the number came out, we really started coming off. I think there was a lot of people hoping the number would come out a little bit better and more consistent with what the ADP numbers were showing. On to a couple of trades that I did, and these were the earnings trades. GoPro, I am actually short some calls that are deep in the money, so I've been trying to lower my cost basis around this, and with GoPro, I went into the June and sold the 15 calls for 25 cents and bought them back this morning for 11 cents. These two next trades, or GoPro and YELP, I actually tweeted out on Twitter towards the end of the day when I put these on. So if you don't follow me on Twitter at Wolfman's blog, I do tweet out what my earnings trades are if I haven't had an opportunity to get them in on the daily market commentary, if I have the time to do that. So follow me on Twitter and you can find out what I'm doing there late in the day. On to YELP. YELP is another one. I actually got pretty lucky with this YELP. As you can see, it's trading into the 25 handle, and I tweeted this one out also. And I was in the May and sold the 25 calls. Originally sold them for 40 cents, was able to buy them back for 25 cents. Now, if you watch the webinar on earnings setups that I do, I talk about this. I put these on late in the day, with an hour or so left in the day, put those on so I can have a pretty consistent or mid-market, so that when I pick my strikes, I can have a pretty clean number due to the market maker move that's predicted due to volatility. Now, and I like to cover these right on the open. Now, as you can see, YELP came out with better than expected earnings. It was expected, as you can see here, negative 15 cents, came out positive 8 cents. So that really made me nervous. As you can see, the market opened up and really started pushing higher. I was still out of the money, but this is about where I decided to cover those, or sorry, this was when I covered those trades. We opened up, went up, tested that 25 handle. I was really nervous, came back off, and that's when I immediately covered those. That was within the first 15 minutes of the day. So it was like one strike out of the money for the most part. But with only one day to go on these, the gamma on those, as soon as it goes out of the money, decayed rather quickly. So I got out of that for 25 cents. Thankfully so, because now those are in the money and are probably worth more than what I sold them for. So they would be a loser. So go to ProTraderStrategies.com. You can find out all the rules about the earnings trades. We still got a lot of earnings left to go, so it'd be definitely a good time to look into this. And with Twitter is another one, kind of like GoPro, that I've had on for a long time. Been trying to lower cost basis on it. And Twitter just had earnings not too long ago, and I sold some calls around that with the volatility a little bit higher. And with Twitter, I am actually short the 21 puts, I believe it is, and it is the 21 puts I'm short. But with this, I went into the June and sold the 17 calls for 42 cents, 50% of my max profit, bought them back for 22 cents. Started out at 21, couldn't get filled, and bumped it up to 22 and was able to get out of those. So that was in Twitter. So continuing to lower my cost basis on those in order to, if Twitter gets a bit of a pop back someday, I'll be able to cover those for at least a scratch. On to FedEx. This was one of the ones that I wrapped around Steve Primo's strategy number 4. This is one of the few ones that didn't work out. Tried to cover this yesterday when it was at 50% loss on it, and I had on the June 170 calls, and I paid $3.10 for it. I sold it out for $1 this morning, but yesterday in that sell-off, I was literally chasing the market and stopped at about just over 50% loss, and today decided, you know what, it's time to pull the plug on that, so I did. Yeah, as soon as it broke down below these lows yesterday, that's where I started chasing it. On to a trade that I put on. I did the July with EEM, which is the Emerging Markets ETF. Went into the July, which is further duration, because I did this as a debit spread, and sold the 28 puts, bought the 32 puts in there. And the reason why I'm a little bit bearish on this EEM is with the overall market slumping. We saw retail sales here in the United States come in a lot lower than expected. We also got European retail sales, which is below retail PMI, Purchasing Managers Index, came in below 50 at 47.9. So that's just showing that there's not a lot of retail activity going on. So the emerging markets, that's going to affect everyone, especially the emerging markets, if those smaller countries can't produce and they're just a basic global slowdown. So I decided to get short this, get some negative deltas in there. Remember, negative deltas is when you're shorting the market, so I did that with EEM. Today we're going to be doing a webinar on getting long put spreads for when we're bearish in something. So I'm going to go into detail all those rules around the trade, like EEM and other ways to do setups to add some negative delta to an overall portfolio. And if you're long a lot of stocks in your portfolio, this will be a great way to help try and hedge some of that long upward delta. All right, so that's all I got for you guys today. Go to protraderstrategies.com, sign up for that, and if you can't take that, take it easy.